What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we had a very strong continuation of the bullish breakout in the Dow Jones, but we still see a weak tech sector. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.07% and SPY is still holding above that very strong breakout level, which is the 50 EMA. So SPY above this level of support right around 444 is going to be incredibly bullish, and we're very close to testing the bullish breakout above that, which is going to be the resistance zone right around 448 to 450. If SPY starts breaking out and closing above 450, we will very likely regain the full bull trend, and then we should be well on our way to going back into a bull market. And don't forget, we still do have this valid zigzag pattern, which could take us to retest brand new all-time highs, or at least retest the previous all-time highs. So when you're looking at this zigzag pattern, you need to start seeing bullish confirmation of the breakout of resistance, because we already do have the successful bounce off support. There is still going to be the possibility that we get rejected at resistance and come all the way down to that level at 433 before we get that bullish breakout, and that will still be a valid zigzag pattern. So don't just assume that we have to break out now, even though it does look likely that we could retest the breakout now. And if we do start seeing price action getting above SPY 450, you will want to go ahead and assume we're getting the breakout and we're going to those retests now. Otherwise, look for a rejection around this resistance zone to send us back down to the next leg lower, and that level is still going to be that critical level right around 433.5. So as long as SPY is above 444, I think you need to be bullish that we're getting the breakout sooner rather than later. But if we get rejected at resistance and lose support at SPY 444, then you're looking for the retest of strong support at 438 and that critical level at 433.5. Remember, if we start breaking down below that support level at 433, we are going to significantly increase the probabilities of the bear market scenario, even though we still do have very strong support down here at 428. So try to stay bullish above this support level at 444, and you can get more cautious of a retest of 438 or 433 if we start closing below that level. If we get the bullish breakout above 450, you're looking for strong resistance right around 457 and 462. And the next time we break above 462, we should have confirmation of the full bull market. So follow the price action at these critical levels and let the price action do all the talking, and get a lot more cautious if we start to see high volume selling and lose that support level at 438. On the NASDAQ 100 triple Qs, we were down 1.46% today, so we continue to see all of the weakness in the tech sector. We're back down to this critical support level at 340, but if that level does hold up, we could still bounce from here and go retest the breakout at 347. So you're looking for very strong support at 340 and that critical level at 335, and below 335, if we lose that support level, we are very likely going to see the bear market scenario. Now there is a counter to that, because when we get to the Dow Jones, you're going to see how bullish the Dow Jones is, and I don't really think you're going to see the Dow Jones entering a bull market while the triple Qs enter a bear market. So while we are seeing relative weakness in the tech sector, I wouldn't be getting overly bullish on tech as a whole if we're starting to see the Dow Jones breaking out. So on the triple Q, stay bullish above this level at 340 and get more cautious if we start to lose that support level. On the break above 347 of resistance, we're looking a lot more bullish, and we still do have a gap to fill right around 349. And above that, we have strong resistance right around 351 and then 357. If we can get above 357, you're looking for that gap close at 360, and the bullish breakout above that will be the close above about 363. So there's a ton of resistance for the tech sector because it is lagging behind, so it's a lot closer to critical support than it is critical resistance. So continue to watch these levels at 340 and 335. In the Dow Jones, you're seeing where all of the relative strength is, and that's in the Dow Jones, because we're up 0.69% today, and we did get the confirmation of the bullish breakout in the price action. We gapped up and did not close that gap, so that could turn into a breakaway gap where we just continue to run higher and never actually fill that gap. And remember, we still do have a gap up here at 360. So with the gap at 360 and regaining the bull trend with the bullish price action breakout, by the time we see the Dow Jones closing above 353, we should have the full bull trend, and then we will have price action confirming the breakout because we will have the daily higher high. So the Dow Jones is looking the strongest, and we did go up on increasing volume today, as you can see down here. So with stronger breakout volume, that is confirming the bullish price action. So by the time we get above 353, it should be a no-brainer that we're going up there to fill that gap at 360, and we'll likely continue to run higher and retest the previous all-time highs, so watch resistance at 365 and 368. Now, if we do come back down to retest the breakout, you're looking for strong support around 349, and that gap close is going to be around that same support zone. If we break down below 349, we still need to hold above the 20 simple moving average at 347 and the 50 EMA at 346. If we start breaking below 346, you're looking for a retest of 340, and below 340, this looks like a false breakout, and it looks like we're going into a weaker market, which means we're retesting critical support at 333. So at this point, stay bullish as long as we're above 346 and respect the higher volume breakout in the price action because the Dow Jones is looking very strong relatively speaking. On the Russell 2000 small caps, we were up 0.38% today, and we did test that critical resistance around 203 and failed to close above that level, and we also closed the gap to the upside. So we still do have a gap way down here at 195.7. So if we do start breaking down below support right around 200, look for a retest of support at 197 and a gap fill down here at 195.7. If we lose that gap as support and continue lower, it's more than likely we're continuing into the bear market, even though we still do have strong support at 193 and 191. The bullish breakouts will be a close above 203 and then a close back above 208, and we should be back in the full bull market in the small caps by the time we close above 212. On the ARKK ETF, we were down about 6% today, and ARKK continues into that bear market just as expected, and we're very close to closing that gap at 54.7. Remember, I think it's more likely with a bear market scenario that you close the gaps to the downside before we go any higher, so don't expect to see ARKK going any higher until this gap closes. Once that gap closes, we could find support, and then we could start to bounce up to close the gap at 66, but we're not getting bullish on this ETF until it starts closing above 71, so continue to look for shorting opportunities at resistance, and those resistance levels will be right around 63 and 66. On the VIX, we were down 5% today, and the VIX is very close to trying to close below 20, which is going to be a bullish development. Remember, when the VIX is below 20, we're looking for a bull market, and as you can tell in the Dow Jones, we are starting to get the bullish breakout. So if the VIX starts getting daily closes below 20, you need to start thinking a lot more bullishly about the stock market. If the VIX spikes off of this level as support and breaks back out above 24, look for high volume selling as we likely go into a panic selling mode, and then we could start losing some critical support. But right now it looks like the VIX is trending lower, so wait for that confirmation below 20 to start getting bullish. On Bitcoin, we're currently flat on the day, even though we did come up here and test that critical resistance breakout at 42,000, but as you can tell, sellers are stepping in at that level and we have yet to close above that level. If we start closing above 42,000, that will be bullish, so you can get a lot more bullish on Bitcoin if we can break out above this resistance level. If we do get the bullish breakout above 42,000, you're looking for strong resistance at 45,000. And if we get the breakout above 45,000, you're looking for the next bullish level of resistance at 48,000. Now to the downside, if we do get rejected at this resistance level at 42,000, you're looking for stronger support down here at 39,000. And if we lose that level, you're looking for a retest of 37,000. On NVDA stock, we were down 3.23% today, and NVIDIA tried to break out above resistance at 223 and got rejected yet again. So this is clearly very choppy price action in NVIDIA stock. The longer the bears can keep NVIDIA below filling the gap at 230, the more likely they're going to get their bear trend. So be cautious on NVIDIA if we do start losing this support level right around 209 to 210. Below that, you're looking for a retest of the low at 197 with bullish breakouts at this point on a close above 223 and the gap fill at 230. And if we can fill that gap and continue to run, you're looking for very strong resistance at 244. On Tesla stock, we were down about 5% today, coming back down to that very critical support level right around 974. And so far that level is holding up as support, even though we didn't fully test it intraday. So from here, if we lose this support zone right around 970, you're looking for a retest of that strong support level down here at 937. If we do break down below 970 and we fail to hold above 937, you are very likely going to see a much deeper correction in Tesla stock. Now, bullish breakouts at this point will be a close above 1029 and getting back over that 20 simple moving average at 1041. And then you're looking for the gap fill up here at 1087. So look for that bullish confirmation of the breakout above 1029, and then above that you're looking for the gap fill at 1087, or you're looking for the bearish breakdown below 970 and the retest of support at 937. On Apple stock, we were pretty flat on the day, only going down 0.1%, and we did close below resistance at 168. Remember, we need to break out above 168 to get bullish, and above that breakout, we will have resistance at 171 and the gap fill at 174. If we fail to break resistance at 168, you're looking for a retest of support at 165, and if we break below that support level, you're looking for a test of support at 162. Below 162, we're looking a lot more bearish, so that by far is going to be the most critical support level. On the financial sector, we were up 0.69% today, and the financial sector did get back over the support level for the second day in a row, but we do have a bear trend. The financials need to scare away the bears by getting back over the 50 EMA, so watch for that as the bullish breakout. The industrial sector was up 0.54% today and got another bullish price action day, with the price action closing back above all the moving averages and starting to develop a bull trend. Remember, 2 days back over the 50 EMA is going to significantly increase the probabilities we go up there to fill that gap at 106. On the healthcare sector, we were up 1.34% today, and the healthcare sector is seeing follow through on that bounce, maintaining the bull trend and back to seeing bullish price action. On the energy sector, we were up 0.39% today, still with the bullish price action and still with the bull trend. So don't look for a correction in the energy sector until we see price action breaking below the 20 simple moving average. So jumping back over to the S&P 500, the market has very well-defined risk levels, whether we're going lower or going higher from here. So make sure you know exactly how you want to trade off of these levels and make your trading plan now. Don't react to the market, have your plan ready before it happens so you know exactly what you're going to do if SPY gets the bullish breakout or gets the bearish breakdown. If you're trading off emotion in a volatile market like this, you are going to get destroyed, so make sure you have a plan and you know exactly what you're doing no matter what the price action does from here, and then make sure you actually follow the price action and let the price action do all the talking. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out more information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.